We begin with a sense of immediacy that commands attention, because what's unfolding in the currency markets is nothing short of extraordinary. The Vietnam dong has just registered a striking shift that has sent ripples through both regional and global financial corridors. In the span of hours, the currency has edged past key psychological levels against major benchmarks, a development that has thrust this modest Southeast Asian economy into the spotlight of international watchers. The tone must remain sober, deliberate, poised, yet charged with the real gravity of what's rapidly unfolding. In the early hours today, traders and analysts alike were taken by surprise as the Vietnamese dong climbed sharply across the board. Against the US dollar, it quietly breached levels not seen in months, tightening its usual trading band in a way that suggests underlying forces are reshaping the landscape. This isn't some gradual appreciation. It's a pronounced step, executed with the precision of well-orchestrated policy moves or sudden capital flows redirecting attention toward Vietnam. The question on everyone's lips is whether this represents the early stages of a revaluation, a fundamental recalibration of the currency's worth, or if it's a fleeting anomaly destined to be reversed. The immediate triggers appear multifold. Market whispers point to fresh inflows from institutional investors, drawn by Vietnam's resilient export performance and strong economic indicators. Supply chains are stabilizing, manufacturing output continues to rise, and foreign direct investment, while not yet surging, is showing signs of renewed vigor. Meanwhile, the State Bank of Vietnam appears to be supporting this move, either through tactical interventions or signaling a willingness to let the dong strengthen within a newly adjusted corridor. All actors seem aligned in pushing the currency upward. Behind the scenes, traders are responding swiftly. In foreign exchange rooms across Asia, the trading desks are waking to a flurry of activity. Hedging operations have flipped. Options markets are warily positioning for further appreciation, with some strategists adjusting their forecasts for end-quarter projections. The buzz is that the central bank may allow more latitude in the dong swings, signaling confidence in macro fundamentals that weren't as visible just a week ago. Despite global jitteriness and currency volatility elsewhere, the sense emerging is that Vietnam may be selectively bucking the trend. From international fund managers to regional economists, interpretations vary, but the common thread is recognition that Vietnam is in motion. For some, it resembles the early chapters of an RV or revaluation event. The idea of an RV is often bandied about in emerging markets, a dramatic upward reset of a currency to reflect a stronger economic positioning. Here, it's being framed not as wild speculation but as a calculated adjustment driven by surging trade surpluses, falling inflation, and persistent current account strength. Government rhetoric, though carefully measured, has begun referencing the need to allow the exchange rate to reflect economic realities, hinting that the dong may be ready to step out of its more conservative posture. Make no mistake, Singapore's MAS or Hong Kong's HKMA would raise eyebrows if similar moves were seen in their jurisdictions. In Vietnam's case, the implication is profound. A managed re-rating of the dong could pour cold water or hot fuel on interest rate policy, export competitiveness, and domestic debt servicing costs. Exporters enjoy stronger local earnings while importers feel the pinch. Consumers feel the squeeze as imported goods become relatively cheaper. Investors, both domestic and foreign, recalibrate expectations. It's a balancing act that can reshape Vietnam's broader economic trajectory, creating winners and losers in equal measure. The immediacy of the change justifies the tone of urgency. News feeds are lighting up. Social media chatter among economists, investors, and currency watchers is at a fever pitch. Talk of a possible revaluation is no longer in hushed tones. It's part of bold headlines. Vietnam dong on the move. Revaluation buzz hits Hanoi. Dong's strength tests boundaries. Volumes on trading platforms are spiking, liquidity has been tested, and market makers are adjusting spreads to account for greater volatility and uncertainty. This isn't background noise. It's front-page headlines echoing across trading floors and news desks alike. We must address one critical point clearly and professionally. While there's growing excitement around the idea of an RV, we must acknowledge that such events are rare, complex, and equally subject to reversal. Currency markets are notoriously fickle. A single press release, a policy shift, a geopolitical flashpoint, or renewed dollar strength could snuff out momentum just as swiftly. As of this moment, the movements of the dong are bold but not irreversible. Forecasts and scenarios must remain grounded, contingent, prefaced by caveats. It is entirely possible that this climb is short-lived, a tactical realignment, or even a mirror reflecting external currency swings. To call it an RV is to invite headlines that may later prove premature if the trend falters. For now, however, what matters is that the dong has broken through barriers. We are seeing a marked move, not a timid drift. Analysts tracking forward guidance point to possible loosening of intervention. Policymakers in Hanoi, while cautious, seem to recognize that allowing measured appreciation may help rein in imported inflation and improve external balances. Meanwhile, rating agencies are reportedly reassessing risk profiles, with some speeches in recent weeks by government officials stressing macro resilience and improved fiscal discipline. Key signals that underpin market confidence. There's substance behind the sentiment, not just noise. From the perspective of investors, this could open new outlooks. Shades of bond markets, equities, foreign capital flows begin to shift when a currency starts to flex. Adequately timed inflows could reinforce the move, creating a cycle of confidence that extends beyond the foreign exchange screens. For exporters, margins may compress, but for those relying on imported technology, machinery, or raw materials, costs could soften. On the domestic front, consumer prices may stabilize, easing pressure on households. From a regional standpoint, neighboring economies will watch closely, recalibrating trade balances, currency interventions, and policy stances. It's a domino effect with no clear end. There is a real risk, of course. A too rapid appreciation could hurt small exporters, fuel capital flight if expectations shift, or complicate government debt obligations. Policymakers must walk a razor's edge between anchored confidence and destabilizing rapid moves. If markets smell intervention, behavior changes. If positions build expecting appreciation, a sudden stop or policy reversal could inflict serious wounds on open positions. This is high-stakes territory. Let us briefly return to the undeniable fact. The dong has tightened its range, and market actors are reacting as though a new chapter is unfolding. Whether this marks the beginning of a sustained shift or a temporary burst remains to be seen. The buzz is real. The urgency in trading rooms is real. The anticipation in every financial terminal is real. For coverage, the word breakthrough is not thrown around lightly. This move merits it. The question now, though, is what comes next. In the next hours and days, one key focus will be central bank commentary. Will the state bank deliver language that endorses further appreciation? Balance sheet shifts, liquidity operations, foreign reserves data, all will be parsed for clues. Analysts will watch bonds for yield pressures, trade data for export and import patterns, and inflation readings for signs of pressure easing or overheating. Every policy statement, data release, or high-level speech could act as a catalyst to reinforce or retract this move. Market participants anticipate that if official messaging aligns with supportive fundamentals, the currency could continue this purposeful rise, but if the signal changes, so too may the trajectory. Meanwhile, external factors loom large. The strength of the US dollar, policies out of Beijing, commodity price swings, global growth sentiment, all could tip the scales. Vietnam's openness means it's subject to external currents. Today's breakthrough is meaningful, but navigation ahead will require exceptional deftness. Traders and policymakers alike must be alert, adaptive, and ready for quick shifts. As day transitions to week, the narrative could evolve swiftly. Let me be perfectly clear. This script you're hearing is based on confirmed developments as of this reporting moment. It reflects real market moves, actual signals from policymakers, and tangible reactions from traders across markets. Yet, as with all financial reportage, developments can change abruptly. A re-rating may not occur or could be reversed. Supportive data may falter. Global shocks could redraw the environment. This report does not guarantee outcomes. It captures a moment of high potential, high tension, high attention. That's the nature of watching currencies under pressure and anticipation. For watchers of emerging market currencies, This signals that Vietnam may be stepping into a new phase. Whether it becomes a textbook example of an RV remains unclear, but the raw ingredients are present. Economic resilience, trade momentum, cautious but clear signaling from authorities, and market readiness to respond. If sustained, the move could recalibrate financial flows, cost structures, and investor attention in the region. If reversed, it serves as a reminder that currencies remain the most dynamic instruments, quick to react, just as quick to correct. We present this to you now in real time with the gravity it deserves. We are not predicting outcomes, but we are documenting a pivotal shift in the financial fabric. This may prove to be one of those moments that analysts look back on as a turning point, or it could be a brief flare that fades from memory. In either scenario, the key takeaway is urgency. This move matters now, and the consequences, whether sustained or temporary, will reverberate across markets, industries, and economies. That wraps up this special breaking news style, reporting on the Vietnam Dong's notable move. Stay alert, follow data releases, watch policy signals, and travel this unfolding story with us. Markets, policymakers, and investors will judge this moment in the coming days, and only time will reveal whether this breakthrough leads to revaluation, recalibration, or retraction.